Okay, welcome back to my YouTube channel. And today I'll do a question on taxation of company business. And if you're watching this video for the first time, please subscribe to my channel. We have a target of getting to 1,000 subscribers in the next 30 days. And for those who have subscribed already, thank you so much for supporting my channel. And if you are on this channel for the first time, I can assure you this is the channel that will be able to pass your paper on business data analytics on your first attempt. So without further ado, let me read the question. Pareto Limited has provided the following income statement for the year ended 31st December 2018. We have income, we have the gross profit, we have the dividends, which is net, we have foreign exchange gain, we have rent received, which is commercial building, interest received from Fiery Bank Limited, net, bad debts recovered, insurance claim, profit on sale of equipment, sale of debentures. Then we have less expenses. We have salaries and wages, increase in provision for doubtful and bad debts, contribution to NSSF, advertising, stationery, depreciation, subscriptions, trading loss, interest, transport, legal cost. Then we have a net profit of 7.584 million. Then additional information number 1, dividends comprise dividends from Beta Limited and the dividends from Bona Cooperative Society. Number 2, foreign exchange gain comprise amount of realized foreign exchange gain, amount of unrealized foreign exchange gain. Then bad debts recovered related to bad debts on sale of furniture, bad debts on credit sales of goods. Number 4, insurance claim related to insurance compensation on loss of profit, insurance claim on loss of motor vehicle. Then advertising comprise of advertising through daily newspapers, advertising on passenger sheds at bus stops. Then we have subscriptions related to annual subscription fee to Chamber of Commerce and Industry. Let me extend this. Subscriptions to Employee Sports Club. Then number 7, interest comprise interest on debentures, interest on loan acquired to build commercial rental houses, interest on money borrowed to pay taxes, to pay tax and penalties. Then legal costs comprise appeal to tax tribunal, defending business property rights, registration of lease agreement, which was for 100 years. Then number 9, capital allowance were agreed with the Commission of Revenue Authority at shillings 960,000. Required 1, adjusted taxable income or loss for Pareto Limited for the year ended 31st December 2018. Then number 2, tax payable by Pareto Limited, if any. Yeah, so I'll do this question. Yeah, so we'll have Pareto Limited. So I'll do it here. Pareto Limited. It is adjusted taxable income. Sorry, adjusted taxable income. Is it for the year ended? December 2018. Okay, I'll create the bottom border here. I'll create the bottom border. Then I'll merge and center all this. I'll merge and center. I'll also merge and center that. Okay, so the shillings were in, so they were not in thousands, so I'll use them the way they are. So I'll just say shillings. Huh? Yeah, so we just copy that to shillings. Then we'll start with the reported net profit. Now, before we do the adjustments, reported net profit. So my reported net profit, it's here. You just pick that value. Yeah, then you add the disallowable expenses. Add disallowable expenses. Yeah, so what are these disallowable expenses? These are expenses that does not relate to business. Yeah, there are expenses which are occurred, but does not relate directly to the business which we are undertaking. Yeah, so those are the disallowable expenses. So we'll add them back to the reported net profit because they were not supposed to be taxed. Yeah. So I'll go to expenses. So I'll start with salaries and wages. Yeah, you go to expenses and you start with the salaries and wages. So when we check at the salaries and wages under expense, salary and wages, these are allowable expenses because those were salaries and wages which was being paid to workers of this organization. So that's an allowable expense. Then we have the second one is increase in provision for doubtful and bad debts. Increase in provision for doubtful and bad debts, except for specific provision, is a disallowable expense. So we'll pick it. Increase. Sorry, you'll allow me to extend this. Yeah, there. That's correct. Yeah, so that's a disallowable expense. So we'll add it back. Then we have contribution. We have contribution to NSSF. We have contribution to NSSF. Yeah, so that's when the employer contributes on behalf of the employee. When the employer does contribution on behalf of the employee. So that is it an allowable or disallowable expense? Employer's contribution. Employer's contribution is an allowable expense. Yeah, it is allowable. It's the employer that contributes to employee. So we won't consider it. So we go to advertising. And advertising and additional information. Let us go where there was advertisement. Additional information number 5. Advertising comprised of advertising through daily newspapers and advertising on passenger shades. So advertising through newspapers is an allowable expense because it's done through the media. Yeah, and it's an allowable expense because it's done through the media. But advertising on passenger shades at bus stops is a disallowable expense. It is a disallowable expense because it's not done through the media. So we'll add that. So allow me to copy this. Advertising, this one. So yeah, this is the disallowable. Yeah, the first one through newspaper is an allowable. So we'll adjust that amount. We'll add it back. We'll add it back. We'll add it back. We'll add it back. Oh, sorry, let's continue. So we have advertising on passenger sheds, that's okay. So after advertising, we go to stationery. Yeah, so this stationery, we assume that they were used for in the business. Yeah, so unless they specify, so this is allowable, then depreciation is a disallowable expense. Yeah, depreciation is a disallowable expense. So we'll add it back. Then we go to the next item. We have subscriptions, and there was clarification on subscription and additional information number 6. They'll say that subscriptions related to annual subscription fee to Chamber of Commerce and Industry. This is a trade association, so it's allowable, while subscription to Employee Sports Club is a disallowable expense. So under subscription, the second one to the sports club is a disallowable. So we'll pick it. Yeah, the first one is allowable because it's a subscription to a trade association. Yeah, so we'll go with that. So we'll have 610. Yeah, so that 610 is disallowable. Here we continue. We have trading loss. Yeah, trading loss is as a result of the sales that we make. So it's an allowable expense. Yeah, it's an allowable expense. So we won't adjust it. Then we have interest. So we'll go to interest. Interest also was provided additional information, if I'm not wrong. Yeah, number 7. Interest comprise of interest on debenture. So we start with interest on debentures. So you check whether it's allowable or disallowable. So interest on debenture is an allowable expense because it was for money borrowed to develop the business. Yeah, this was interest on what was borrowed to develop the business. So it relates directly to the business. So that's an allowable expense. So we won't adjust it. Interest on loan acquired to build commercial rent houses. So these are disallowable. Reason being, it was an interest on loan acquired to build commercial rental houses. So we are not into the business of doing rental houses. So it's a disallowable. So we start with that. It's a disallowable expense. So just come and pick it. Interest on loan acquired. Interest on loan acquired to build commercial, disallowable. Then let us see the other interest. Yeah, interest on money borrowed to pay tax and penalties. This also disallowable, does not relate in any way with the business we are carrying out. So that's also a disallowable. That's also a disallowable. Okay, so the next one also is a disallowable because interest on money borrowed to pay tax and penalties, that's a disallowable expense. It's a disallowable expense. So we'll take 70. Then you go to the next item. You're done with interest. So you go to transport. You go to transport. And this transport, they're not specific whether it's whether it was related to the business. So we'll assume that it was related to the business. So we'll assume that it's allowable. Yeah, then we go to legal costs. Legal costs. So they summarize legal costs here. They summarize the legal costs. Additional information number 8, that legal costs comprise appeal to tax tribunal, which was 155,000. An appeal to tax tribunal is an allowable expense. Yeah, because they were appealing on behalf of the business. They were defending business interest on a tax tribunal. So this is an allowable expense. Then defending business property rights is also an allowable expense. Yeah, because we are defending business property right. Then registration of lease agreement, which is 100 years at 90,000, is a disallowable expense because the only allowable expense for lease agreement is up to 99 years. Anything above 99 years is a disallowable legal expense. So we'll take registration. Take registration. We'll take the registration of lease agreement. Yeah, that's the only legal expense that is disallowable. So we'll take it and pick 90. Yeah, so after that, then I don't see any adjustment and the expenses. So that's bring us to the end of the adjustments under this disallowable expense. So I'll sum all this from reported net profit. So I'll just say equals to, I'll sum all that. I'll enter. So allow me just to bold that so that you can see it clearly on your side. So next is to less the non-taxable income. Next will be to less the non-taxable income. Less non-taxable income. So I'll bold that. So we'll check the incomes apart from the income which is coming from the business, the other income. So the income which is coming from the business that we're carrying out is the gross profit. So anything that falls below this is other income. So we'll check. We'll check. We'll start with dividends, which we are given as net. We'll check for dividend. So dividend has a net of 675,000, but there was additional information here on dividend. Number one, they said dividends comprise dividends from Better Limited was 545,000. Then dividend from Bona Cooperative Society was 170, giving us a total of 675. So dividends from Better Limited, this is taxable, yeah, because these are dividends from equity dividends, but dividends from Bona Cooperative, any dividend from cooperative society is an untaxable income because there's a withholding tax rate of 5%. So for this, here dividends from Bona Cooperative Society is non-taxable. So we'll adjust that as a non-taxable income. So we take dividends from Bona, the amount is how much is 170,000. Then the next item will be foreign exchange gain. Foreign exchange gain. So we have 175. So there was adjustment for foreign exchange gain. There's an additional information. They said that foreign exchange gain comprise amount of realized foreign exchange gain and amount of unrealized foreign exchange gain. So any realized foreign exchange gain is a taxable income. It is a taxable income, while unrealized foreign exchange gain is an untaxable income. So I'll pick this, the second one, the unrealized. Unrealized is an untaxable income. So I'll pick that amount for unrealized. 50. I'm moving well. Then we go to the next item, and that's rent received, commercial building. Yeah, it was rent received on commercial building. So that's taxable. That's taxable. Yeah, that's a taxable income. So we won't include it here. Then we have interest received from Fahari Bank Limited. Interest received from Fahari Bank Limited. So interest received from bank is the interest on fixed deposit. So interest on fixed deposit, this interest that we received from Bank Limited, this is an interest on fixed deposit. So that is an untaxable income because you don't tax the interest on fixed deposit. So I'll pick it. Interest received from Bank Limited, and it was already met. Yeah, so you don't tax it. That's an untaxable income. Yeah, then the next item after interest is bad debts recovered. Bad debts recovered. So it was a total of 370, but under additional information, there were adjustments and additional information number 3. They have said that bad debts recovered related to bad debts on sale of furniture, which is 130,000, and bad debts on credit sales of goods, which was 240. So the first bad debts on sale of furniture is an untaxable income. Yeah, because you see, we are not onto the business of selling furniture. Yeah, but bad debts on credit sale of goods, when it is recovered, it has to be taxed. The 240 has to be taxed. So I'll pick bad debts for sale of furniture. Yeah, that's non-taxable. And that bad debts, that bad debts of sale of furniture is non-taxable income. Yeah, so I'll pick 130. Good, we continue. So insurance claim, and for insurance there was also adjustment. Number 4, insurance claim related to insurance compensation on loss of profit, which is 380,000. That is taxable. Yeah, any insurance compensation on loss of profit, because we are in the business. But insurance claim on loss of motor vehicle is an untaxable income. Yeah, insurance claim on loss of motor vehicle is not taxable. Yeah, so you will reduce that. So the amount was insurance claim on loss of motor vehicle was 45. Continue. Then we have profit on sale of equipment. And I think this did not have any adjustment. So profit on sale of equipment is a capital gain on sale of asset. So the capital gain is an untaxable income. Yeah, that's an untaxable income. You don't tax capital gain on sale of assets. So that's an untaxable income. So you put it there. Then sale of debenture. Sale of debenture is non-taxable income. Reason being, a company that issues its own shares and debenture does not pay tax. Yeah, so does not pay. So it's a non-taxable income. So you'll pick that and pick the whole amount. Correct. So we go again. Now we are done with non-taxable income. So I'll sum this. I'll sum all the items under non-taxable income. Then the next item will be the allowable expenses. So I'll also less the allowable expenses. In this case, now the only allowable expenses we calculate are the capital allowances. Allowable expenses. So less allowable expense. So you check, and additional information, we were told that capital allowances were agreed, number 9, capital allowances were agreed with the Commissioner of Revenue Authority at shillings 960,000. Yeah, so we just write capital allowances because those are the only items you include under allowable expenses. We just come and say capital allowance. It was agreed at 960,000. Yeah. 960,000, correct. So that the adjusted business income will be, so I'll put it here, the adjusted business income will be equals to, yeah, this amount here minus the non-taxable income minus the capital allowance. Yeah, so these are the adjusted business income. Yeah, but we have other incomes. So you'll add the other incomes here. So allow me to say other incomes. Yeah, so there was an income, the interest from the bank. Yeah, that interest received from Fahari Bank Limited. That's the interest on fixed deposit. Yeah, that's the interest on fixed deposit. So we add it back because it's an income. Yeah. So interest on received, pick that, then you add it back to the adjusted business income. How much was the amount? It was 289. Then the dividends was now, you're supposed to add dividend at 5% final. That's the withholding final, but it will be 0. It will be 0. Then now the adjustable taxable income will be the total. Yeah, so the adjustable taxable income will be now the sum of all this all the way. Yeah, so this is the adjustable taxable income. So it is the adjusted taxable income or loss. Yeah, so it's an income because it's positive. Yeah, so with that, we have answered part A of this question. Then we go now to tax payable, which is part Roman 2. The tax payable, so I'll do it here, tax payable. The corporation tax will take 30%, but the examiner does not give it here. So we'll take 30% tax payable. With 30% equals to 30% times the adjustable taxable income. So we'll get that value. Then you less the withholding tax relief if there's any. So I'll say less withholding WHT reliefs. Yeah, which is this question we are not given the withholding tax reliefs. Yeah, but if you are given, then you have to less it. Yeah, so it's not there. So allow me to extend this. So I'll say 0. Then interest on fixed deposit, there's a 15% charge. So we have an interest on fixed deposit. You less also that. Yeah, so less interest on fixed deposit. Yeah, so the fixed deposit, we agree that it was 289. So we'll take the 15% of that. That's what we will deduct. Yeah, that's what we will deduct. So we'll say 15% multiplied by, where is that interest? Yeah, this one. Yeah, but it has to be negative because we less it from the tax payable, so that we get the net tax payable. Yeah, so yeah, net tax payable equals to the sum of this. Enter. So the net tax payable is this one. Yeah, and that's how you are supposed to do that question. That's how you are supposed to handle that question. Yeah, and thank you so much for taking your time to promote my YouTube channel. And I'll continue urging you to subscribe so that we get to 1,000 subscribers within the next 30 days. Thank you so much, Edios.